But we still already have some names that are reporting. We have some movers in focus. Diane King Hall, host of Morning Movers, taking a look at Constellation Brands.
Yeah, and what's interesting to see is the price action in Constellation Brands off the back of their latest results, because initially both in the pre-market and on the open, the stock opened lower, but right now you can see some of the bulls fighting back in terms of the momentum on this. So they did beat on both the top and bottom line. Adjusted EPS came in at $2.63 a share. The street was looking for $2.28. Revenue came in at $2.16 billion. That was better than the $2.12 billion. Right now, shares a little below the flat line, off by just a little more than 0.1%, but had been under heavier pressure in the pre-market and opened initially down about 2% or so. Their guidance was weak, though. They're forecasting earnings per share between $12.60 to $12.90 for fiscal 2026. That is below what consensus is. Consensus is looking for $13.94. Here's what they cited with regard to their guidance. The anticipated impact of the tariffs announced by the U.S. government on April 2nd and the Canadian government that was announced last month. So they talked about that impact, but what's interesting to keep in mind, obviously they have some exposure in terms of Mexico. They have both a glass production facility there and breweries there. Constellation is also planning some cost-cutting measures. Most recently, they did announce that they're unloading some of their wine brands, their mainstream wine brands. You know some of these brands. A couple of them that you would know is Woodbridge. I know that one that has the giant bottle. Then you've got Cook's is another one of the brands that's unloading. It's selling this off to the wine group. They did this a few years ago, selling some of their brands to the wine group. So they're unloading more of those. To them, those are more their cheaper brands, so they're leaning into, on the wine side, the premium side of this. But their beer business is holding up stronger over there. You know, they're behind Modelo's. They say that despite the exposure that they have to Mexico, they're actually planning to beef up their brewery operations there. Even though, again, Mexico has been in the crosshairs of the U.S. government, they're planning to spend around $2 billion to build out a third brewery site in Mexico. And by the end of fiscal 2028, they said they expect to increase capacity in Mexico to support the anticipated growth of their high-end beer brands. So clearly they're pushing more into more premium products, whether it's on the beer side or the wine side for Constellation Brands. In terms of the brands of wine that they're selling off, they expect that to close at the end of the first quarter, the end of their first quarter, because again, they operate on a fiscal year ends at the end of May. And the leftover wines that will come under its umbrella on that piece of their business would be predominantly priced $15 and above, is what they said. But in terms of additional cost-cutting measures, they say they're reviewing their organizational structure. They're also targeting $200 million in cost savings by fiscal 2028, Nicole.
What's interesting, yeah, that's the whole thing, is that I was going to say that 2026 to 2028. So companies are really, and I didn't know whether or not a lot of companies would actually provide guidance because they don't really know exactly what the tariff situation may be. In this case, they lowered the outlook for fiscal years 26 to 28, citing the anticipated impact of tariffs. And they've already lost close to a third of the value in the last 12 months. And it's not just, imports in general. It's also the cost of aluminum for the cans. So they have a lot to digest there.
Absolutely. Great point. And I mean, I think you're right about not anticipating if companies will give guidance, because you think, when Delta came out and gave their results and didn't give guidance, that might be a template for the rest of the earnings season, that we would hear more and more companies not release guidance or pull back their guidance for a full year with the expectation that it was unclear where tariffs will be. Maybe that will change, since we know there is a 90-day pause now, and we'll get more guidance from companies. As you mentioned, on Friday, we'll get the bank. So we'll see what narrative they choose to tell when it comes to guidance.
Let's get to those cruise lines. Are people going to be cruising or not? Morgan Stanley has some thoughts.
Yeah, they do. Look, and it looks like they're more constructive on one cruise liner, but pulling back on another one. They do point out in general that, to paraphrase how Morgan Stanley is looking at this, that the cruise liner are navigating choppy waters here. Diverging signals on these one. Carnival, their new stance on that is they're upgrading Carnival to equal weight from underweight. Their new price target is $25 a share. on Carnival. You're not seeing the market respond to that. Shares of Carnival right now lower. They do say with regard to Carnival, the risk reward looks more balanced after the sell-off that we've seen recently. But overall, they are still cautious on the cruise liners, especially in a recession scenario, saying they just prefer to avoid cruise stocks altogether in that case. And then, you know, there's just also a red flag around this sector. There is a big decline in cruise sentiment over the past few years, and so you're seeing increasing kind of pullback in terms of views and sentiment around that. In terms of Royal Caribbean, they are keeping them at equal weight, so they are, you know, pretty neutral on Royal Caribbean. That's been the standout in the group. Not year to date, but if you look at it on a year-over-year basis, it's up, you know, more than 49% on a year-over-year basis. But Royal Caribbean still facing some pressure along with the overall cruise liners. They've lowered their price target to $220 a share on Royal Caribbean from $270. But again, they've been, you know, on the scene more constructive in terms of how the street looks at Royal compared to the rest. They're concerned though about demand and overall consumer demand. GDP downgrades from their in-house economists. So that is what's fueling their views and being just overall less constructive on the cruise liners.
All right, and look, these names have really come down. You mentioned a few of them. I mean, Norwegian Cruise is still down year to date over 30%. One of them was down over 20%. This was a darling group after the pandemic because it got beaten down and then took off, and it was up 100%. I mean, traders and money managers were loving it, but they've since fizzled.
Yeah.
Last but not least, the car story, GM, Tesla, UBS out with a call.
From the seas to the streets. You know I like to come with the puns here. All right, so you've got GM in focus today and Tesla as well. UBS changing some outlook on this. UBS downgrading GM from a buy to a neutral. Their new price target, $51 a share. That's down from $64 a share. So again, joining the chorus of analysts who are becoming less constructive on the car makers. The issue, tariffs, of course. UBS expecting a heavy hit to GM's cost structure, especially for cars produced in Mexico and Canada. They have significant exposure there. They're expecting a $5 billion annual cost headwind if the tariffs go unmitigated. That's based on that 25% tariff applied to material costs of a $35,000 vehicle. Bottom line, tariff tension, costly drag on GM's outlook. For Tesla, it is still in the hot seat. UBS still holding firm on its sell rating for Tesla. They've cut their price target now below 200 to 190 for Tesla. Their previous price target was 225. They're expecting their earnings expectations are just shifting downward, just potential risk to Tesla from China and the tariffs there.
See, it's such a wide spread on the calls on Tesla.
Absolutely.
Because we had Garrett Nelson who had 360, Mizuho has 375, and here you are talking about UBS
190.
to 190. Okay, Diane King Hall, great to see you.
All right,
Thank
great
you
to be
so
with
very
you.
much.